Smaller lot sizes are also common, such as mini lot, 10,000 units equals 0.1 standard lot. Micro lot, 1,000 units equals to 0.01 of standard lot. Nano lot, 100 units equals 0.001 of standard lot.
I'm running from nothing to something. I'm running from nothing to something. I'm running from nothing to something. I'm chasing my dreams.
Welcome to the Basic Trading channel, where we break down the essentials of trading, just to help you navigate the financial markets with confidence. Today, we're diving deep into a fundamental aspect of trading that can make all the difference, which is lot size. Stick around as we unravel the mysteries of lot sizes and empower you to tailor your trades with precision. Let's get started. About lot size. Now let's tailor our trades with precision by exploring lot size. By mastering this concept, you'll gain the ability to manage your position sizes according to your risk appetite. A lot size in trading refers to the standardized quantity of a financial instrument that is traded in a single transaction. Lot sizes vary depending on the type of financial market you're trading in, such as stocks, Forex, commodities, or cryptocurrencies. Lot sizes help determine the volume or quantity of an asset being bought or sold in a trade. Here's a breakdown of lot sizes in different markets. In Forex Market. In the Forex Market, the standard lot size is typically 100,000 units of the base currency. For example, if you're trading the Euro-USD currency pair, a standard lot represents 100,000 euros. Smaller lot sizes are also common, such as mini lot, 10,000 units equals 0.1 standard lot. Micro lot, 1,000 units equals to 0.01 of standard lot. Nano lot, 100 units equals 0.001 of standard lot. Stock market. In the stock market, the lot size can vary depending on the exchange and the company's shares. For example, some exchanges have standard lot sizes of 100 shares, while others may have different multiples. Commodity market. In the commodity market, lot sizes depend on the specific commodity being traded. For example, a lot size for crude oil might represent 1,000 barrels. Cryptocurrency market. In the cryptocurrency market, lot sizes can vary depending on the specific cryptocurrency. Some exchanges allow trading in fractions of a cryptocurrency, while others have standard lot sizes. Lot sizes are important because they determine the scale of your trading position. They impact how much exposure you have to price movements, and also affect the potential gains and losses in a trade. When trading with leverage, lot sizes can also influence the margin required to open a trade. For traders, choosing an appropriate lot size is essential for effective risk management. It's important to select a lot size that aligns with your risk tolerance, account size, and trading strategy. Smaller lot sizes are often recommended for beginners, as they allow for better control of risk. And there you have it. Understanding lot sizes is a game changer in the world of trading. If you found this video helpful, don't forget to give it a thumbs up. Subscribe to Basic Trading channel for more insightful content, and hit that notification bell to stay updated. Have questions or topics you'd like us to cover? Drop them in the comments below. Happy trading, and see you in the next video on Basic Trading channel, your go-to resource for mastering the art of trading. Until then, trade wisely.